Good morning, students. Welcome to the fifth session of the first chapter, Financial Management. So here we are going to study about the goals of financial management, and the goals of financial management are two. They are profit maximization and wealth maximization goal. So what are the learning objectives of today's session means? It is analyzing the goals of financial management and its impact on financial decisions in the business entities. What is the outcome of today's session means? We are going to understand the goals which are to be achieved by the finance department in the modern era, which is also the goals of the overall business organization too. The goals of financial management or objectives of financial management can be broadly classified into basic objectives and other objectives. The ultimate objective of financial management is to fulfill the basic desires of the firms. In broader sense, it has to meet the requirements of not only the shareholders but also the stakeholders. The objectives are achieved by maintaining the consistency in the growth percentage of dividend and market value of shares, and this is possible only when the company is increasing its sales and achieving some profits. Basic objectives. So as already discussed, there are two objectives of financial management. One is the basic objectives and the other is the other objectives. The basic objectives are profit maximization and wealth maximization. In today's session, we are going to study about the profit maximization concept. Profit maximization means earning of profits by a corporate or a company, and it is a social obligation of the business enterprise also. Profits is the only means through which an efficiency of an organization can be measured. Profit maximization achieved by an organization is regarded as the primary measure of success attained by the business enterprise. The survival of the firm also depends upon its ability to earn profits. So therefore, earning profits by a corporate business entity is a social obligation because it is deriving the resources, many resources like human resources and financial resources, help from the government and so on, and therefore it is responsible to earn profits. So how we can measure the efficiency of a business organization means it will be based upon what is the volume of profits earned by a business organization. The success thus can be measured, or the efficiency thus can be measured of an organization by considering the profits of the business organization. What are the advantages of profit maximization means? The first one is profit maximization or profit is a barometer which measures the performance of an organization. So profit is a barometer which will measure the performance of the organization. If the profits are more, the performance of the organization is good. If the profit is low, the performance of the business organization is low. And profit maximization is a rational and natural objective. The business house is using the resources of the nation in the performance of an economic activity. So, the business is using the various resources, human resources, natural resources, economic resources and so on available in the nation for the performance of a business or economic activity, and therefore it is rational as well as natural objective to earn profits or to maximize the profits. Then the next one is profit ensures maximum welfare of the stakeholders. Because we are earning profits, we can ensure the maximum welfare of the stakeholders. For example, one of the stakeholders are the shareholders. Shareholders have invested their money, and in return, to ensure their welfare, we have to give them the dividends, run the business in a profitable way, and see that the business is going to survive on for many number of years, and the capital what the shareholders have invested is safe in the hands of the company. Another stakeholder are the creditors who have given some loans to the business organization in expectation that they are going to get some interest, and also their funds will be returned in some time. If the organization is earning profits, it means that it is possible for the organization to repay the debt capital as well as interest to the stakeholders. Next stakeholders are the employees of the company. They are the people who are who are working for the benefit of the company, and therefore if the company is earning good profits, then it is in a position to give some benefits like salaries and wages on time, and also to maintain their employment. Profit maximization increases confidence of the management for growth and expansion. The business will undertake growth and expansion programs only when the current business is running in profit. So any company will go for increasing their capacity, expanding them, or diversing into different fields only when they are earning profits. And profit is one confidence which will engage the management in growth and expansion programs. Profit maximization attracts investors. So when the enterprise plans for growth, expansion, it requires more capital. The organization will be able to attract more investors for raising additional capital only when it is earning good amount of profits. Profit indicates the efficient use of funds. When an organization is earning profits, it is an indication that the business is using the funds in an efficient way. So, to tell whether a business organization is running efficiently or not, we have one measuring tool, and that measuring tool is the profit. Disadvantages of profit maximization. So, along with the advantages, there are also a few disadvantages of profit maximization. The following are the disadvantages, and among them the first one is profit is not a clear term. So profit is not a clear term because it is defined in different ways in different contexts. Therefore, when we use the word profit, it is difficult to tell in which context it is used. We use the words profit in different meaning, like accounting profit. That is, what is the profit which the books of accounts are showing. The economic profit, profit before tax, profit after tax, net profit, gross profit, earnings per share. All these terms will indicate profit. But when we speak about profit, the company has achieved so much of profits. In which context it is used may not be clear, because one company may tell we have achieved so much of profit, and in the background they may assume that they have got so much of net profit. Another company will tell we have achieved so much of profit, where in their terms it may mean they have given so much of earnings per share. So when we speak about profits, we are not sure about what term is used to refer the profits. It encourages correct practices. To show more profits to the stakeholders or someone else, we may encourage corrupt practices. So therefore, profit maximization cannot be a major objective, because the company may have to indulge in some corrupt practices showing a rosy picture of the business affairs. Therefore, profit maximization cannot be one of the major objective. They can adopt some window dressing, etc. Another disadvantage is profit maximization does not consider the risk factor. The concept of profit maximization does not consider the risk factor while attaining the profits or while aiming at the profits in future, and hence it will have a bearing on the existence of the business in future. Long-term attainment of objectives is ignored, and short-term objectives of earning profits are given more importance when profit maximization is our main goal or objective. And therefore, whatever is the future risk to which the business is exposed, that may not be considered. Profit attracts cutthroat competition. Or profit maximization does not consider the impact of time value of money. So an organization which aims to maximize profit should also take into consideration the time value of money, because a rupee received today has more value than a rupee received after some time. So therefore, when we speak about profits, the future profits what we are getting, that has to be discounted at the current discount factor to see whether the profits what we get is justified or not. And therefore, when we speak about profit maximization, this concept will not take into account the impact of time value of money. Profit maximization will attract cutthroat competition. So because a certain business is making profit, there may be too many business houses which come into existence, so that they are also going to gain some profits. So when a major objective of a business organization is earning profit, they involve in cutthroat competition with other business organization, so that they are earning more profit or attaining some market leadership. So businesses may also involve in unhealthy practices, and the company may also involve in unfair trade practices, so that they are the market leaders and they hold a major share in the market or major market share. Another disadvantage of profit maximization is huge amount of profits will attract government intervention. So when any business organization is making huge profits, definitely there will be some form of government intervention in the business, and therefore the business cannot run smoothly, and the business organization should not have profit as their major objective, because government may intervene. The next one is the next disadvantage is only some industries attain industry leadership. So while earning profit is the main motive of the business organization, some of the business organization would like to attain industry leadership. So this big business enterprises have much capital and other resources at their door, and thereby small business organizations will not have much resources available with them, and they cannot compete with large or big business organizations. Big business organizations also do not bother about increasing costs and also gaining low profits. So they may be ready to take little profits because they want to attain some industry leadership, or because they want to have a huge market share, and this will encourage the small business organizations or concerns, because when the costs are increasing and the profits are less, it may be not, or the small business houses may not be able to run the business in the long run. Another disadvantage of profit maximization is A huge profits invites problem from workers. When organizations earn huge profits, the demand of the employees also increase. The employees bargain with the management for huge salaries and other benefits, which has a bearing on the residual profit of the business organization. So, if the organization is making huge profits, then the workers or the employees may bargain with the management to for higher salaries and other incentives, and therefore after paying all the salaries, wages, benefits, tax, etc., whatever is the profits left out will be very less with the organization. Another disadvantage of profit maximization is the modern concept of marketing does not encourage profit maximization. So the modern concept does not encourage profit maximization concept, because in the modern market, customer is the king and his satisfaction is of utmost importance for any business organization. So the main objective of a marketing department is to satisfy the wants and needs of the customer, and therefore the modern concept of marketing will not encourage profit maximization as their major goal. So when a company earns huge profits, the customers may feel that the company is exploiting them. The company is exploiting them by selling the goods at a higher price, and they are making huge profits, and therefore they feel or their morale is affected. Another disadvantage is profit maximization is a narrow concept and affects long-term liquidity. So profit maximization is a short-term objective, and therefore it will affect the long-term liquidity of the business organization. When we speak about profits, it means that it is a short-term objective. It may not be a long-term objective of a business organization, and therefore it will affect the liquidity, because too much of funds will be invested in the business and the liquid assets may be low. Therefore, when we speak about the concept of profit maximization, it will ignore the factors of risk and uncertainty to which a business house is exposed in the future. We are just concentrating on the profits of today. Another disadvantage of profit maximization, or the last disadvantage, is estimating the exact amount of profit is difficult. So we may tell that in future we are going to earn a profit of rupees 1 lakh in a month, but when we arrive at that month, we may not be getting exactly the 1 lakh amount of profit. That profit may be more or it may be less because of several factors to which a business house is exposed. Therefore, estimating the exact amount of profit is difficult. So these are the one of the basic objectives of business organization, that is profit maximization. We studied about the disadvantages and also the advantages of profit maximization. Here we have a few multiple choice questions. The goal of financial management can be classified into dash and dash. So they are the basic objectives and the other objectives. The basic objectives are dash and dash. So the basic objectives of a business organization is profit maximization and wealth maximization. Profit maximization is a dash term. So profit maximization is a vague term because it does not clearly define the term profit. Earning profit by a firm is a dash obligation. So earning profits by a firm is a social obligation. The modern concept of marketing does not encourage. So the modern concept of marketing does not encourage the concept of profit maximization. Here are the few books for reference. Thank you.